Hello everyone, it is Sunday, November 7th, and this is episode 37 of Odds Are, your S&P 500 weekly market forecast. All right, let's take a look at last week. So if you remember from last week's episode, I said I was scared to death to call the 45.49 lower breach point, and the market, basically justified my fears in that because it continued to go up. We did have a breach of the breach points as predicted, but it was the upper breach point, which was the 46.30. We continued upward. We stretched the upper edge of the Bollinger Band, as you can see here, which is the top edge of that blue shaded area, continuing to go up sharply like a knife in a straight line. And we closed outside of the expected settlement range, right? So the upper settlement limit was set at 46.83, and we closed around 46.90. So something that doesn't happen very often, but we do know that when we present the odds, it was about a 79% chance that we would close within the expected settlement range. So again, we fell into that 21% camp this week. It's very rare that it will ever do that twice in a row. So for next week, we were looking at definitely staying within the expected settlement range, but we'll kind of get to that when we put the numbers up for next week. But definitely did not come close to the midline, the lower breach point, or the lower settlement limit, and forget about the parabolic SAR, not even within range there. All right, let's take a look at the moving averages. Everything still bullish, no surprise there. And now let's take a look at what we're forecasting for next week. So for next week, we're looking at breach points at 46.10 on the downside and 47.36 on the top side. Again, we're about 81.31% chance of a breach of one of those two levels, and then we are expecting a settlement range between 45.56 and 47.67. So again, very rare we have two back-to-back settlements outside of the expected settlement range, so I'm looking at that range and definitely expecting to close within that 45.56 to 47.67. Looking at the breach points, 47.36, we'll kind of layer that with the expected range for next week, and on the actual chart you'll see what I'm talking about, but it's right in line with the upper end of the Bollinger Band. And then the parabolic SAR 42.65 only went up slightly 5 points to 42.65, still well out of range. All right, let's put this into the relative view. All right, you can see here what I was talking about with the upper breach point, 47.36. It's like right on the line with the upper edge of the Bollinger Band, which you can also see that the range itself is just widening, right? So you kind of see that like rubber band effect, which eventually is going to spring back down, and that's where we get back towards that midline. That's one thing that I know is bound to happen. Now, when it happens, that's, obviously the market does things on its own time, but you can see how that Bollinger Band, the blue shaded area, goes through narrow spaces and then it expands. It'll eventually contract again. But that upper breach point, it's interesting. I think that we may get close to it, but I think we're not going to hit that 47.36 breach point. I think we're heading back down at this point. This is why I say this. So the last couple of weeks, I've said, I'm going to just, if I had to pick one, I would choose the lower breach point. Something interesting is going on this week. We actually have another signal at play, which does not happen very often, but it's a signal stating that the market is overbought. Now, to give you a little bit of reference, this signal has only occurred 36 times, right? It's a weekly signal, 36 times since July of 2000. So over 21 years worth of data here, and 36 times this signal has occurred. And out of those 36 times, 32 times, right, it's actually been spot on. So it's about an 89% accuracy rating on this signal. And what it's telling us is that we are going to close below that upper breach point, which is a little interesting, right? Because the breach point usually is not a metric that we use to, or a point we use to gauge where it's going to settle. That's why we have the settlement limit. But this indicator looks at how often we've settled below that breach point, and it's 89% accurate, guys. So 89% chance that we will close the week below 47.36. That being said, that's why I'm thinking we're more likely to breach the 46.10. If we do breach the 47.36, then we're going to pull back down and close below that for the week. All right, let's take a look now at section called, if you didn't see that one coming. All right, so two things last week. I knew that, the market kept going upward, and I felt like eventually it's going to pull down. It didn't happen. I didn't see that coming, even though I knew I was not going to bet against it basically at that point, right? The market had already been on a tear, so it was not really a surprise that it would go up further. But for next week, I'm kind of phrasing it as there's now an 89% chance that we will not even close above that breach point. So don't be surprised, right? Don't be surprised if we do have that rubber band effect, if we do end up coming back down this week. Obviously, that story is yet to be written, but don't say you didn't see that one coming. All right, and we'll wrap up with the quote of the week, which is by Mr. Rod Casilli. He's the CEO or COO, excuse me, of an organization that's called Collective 2, and so they are in the trading space. And well, I won't get into it too much, but basically, Mr. Rod Casilli says that trading is not for the dabblers, the dreamers, or the desperate. It requires, above all, one steadfast trait of dedication. So, if you're going to trade like you mean it. Now, the first part, I definitely understand. People are trying to get into the markets, and they have this false idea that every trade is going to make them a millionaire, or they think they're going to get rich and live on the beach and trade from their laptop. That's not how this works, guys. So, if you're a dreamer, if you're a dabbler, you just want to kind of just dabble a little bit, if you're desperate and you need the money, oh my God, that is the worst time to try to get into the markets. If you actually put yourself in a position where you feel like you need to make a profit, that's just a setup for destruction. But especially the second part of this quote, I really, really like. If you're going to trade like you mean it. So that can mean so many different things, but really it comes down to making sure that you're committed, making sure that you're going to actually spend time and put in the energy to do the research, to understand the markets that you're trading, to understand the risks, to understand that this is going to be a roller coaster, and understand that there's going to be up days, down days, and that you're not always going to win. So you have to be mentally strong and prepared for what lies ahead. There are plenty of traders. You go out there, listen to any podcast. There are so many traders that have stories of how many accounts they blew up, how many times they just lost it all, only to keep getting back on the horse, and eventually they found their niche. Eventually they found their strategy, their system, whatever worked for them. And that's a journey that we all have to go through. You may get lucky, you may find it early on, or you may really have to work for it and earn it. And I think honestly that second path is going to make you much more resilient, a better trader, and keep you in the game for the long haul. All right, guys, with that, I'll let you guys go. Enjoy your week, and I will see you here next Sunday.